Joining me now is Bill Evans, Chief Economist at Westpac, to talk about the recent Consumer Confidence Survey. Bill, thanks for your time today. Can you just talk about why consumer confidence has now fallen to its lowest level since the global financial crisis and the height of the pandemic?
Well, I think the main factor has been inflation. Without a doubt, when sentiment really started to fall, now it's fallen 23% since November last year. But through the course of this year, the build-up in inflation, I think, has been a really big issue. And now, of course, we're seeing the interest rate increases superimposed upon that inflation concern. So, for instance, the overall index is down by 23% since that peak, but the question is now a good time to buy a major household item is down by 27%. And that's really, we really saw in the last consumer price report for the June quarter that household goods such as furniture and appliances and that, the prices have really increased sharply, and I think that's weighing on confidence.
Yeah, how concerned should we be, and retailers in particular, be over these recent numbers?
Look, I think at the moment we're seeing pretty good momentum in the economy. We saw a business survey today indicating that business conditions have improved, and a number of the consumer-related sectors have been doing quite well. So what we're seeing now is the reopening effect, particularly in New South Wales and Victoria. We're seeing strong consumer balance sheets, that $250 billion of additional savings that are sitting on consumer balance sheets, about $180 billion on business balance sheets. And we're seeing a very high savings rate. So as the savings rate comes down, so that frees up more money for spending. So at the moment, things are looking a lot better than you would normally expect given the level of confidence. But as we go through this year, interest rates rise further, the housing market runs into even more difficulties. We'll start to see a marked slowdown in consumer spending. And next year, we expect consumer spending to only grow by 1.2% compared to the 6% we're expecting this year.
Yeah, your survey was completed during the week the Reserve Bank lifted the cash rate for a fourth month in a row. And Aussies in the survey, they say they expect rates to continue rising sharply. Where's Westpac's prediction now for the cash rate?
Well, we saw that 52% of respondents, after they'd seen the 50 basis points, still expected rates to go up by more than 1% over the next 12 months. We're slightly higher than that. We're expecting that they'll go up another 1.5% to reach a peak of 3.35% next February.
Last week, the Reserve Bank released its statement on monetary policy, and in commentary you put out on Friday, you said the RBA was taking a significant risk by allowing a damaging inflationary psychology becoming embedded in Australians' thinking. Can you just explain what you mean by that?
Well, I lived through the 70s, and I remember how damaging that was once people started to think in terms of inflation. So businesses felt really comfortable to continue to raise their prices. And of course, quite rightly so, workers wanted higher wage increases. So the three stages that we've seen of inflation in this cycle, the first one was the COVID shock when we had a big fiscal stimulus and people couldn't spend the money, and that pushed up prices for things where they could spend the money. Then we had the Ukraine war, which pushed up energy and food prices. And the third one is the one that I'm worried about at the moment, which is just this build-up of inflation psychology. And if we let that one get away, that's going to be a lot harder to pull back than the first two, which are already showing signs of easing back. So that's why I believe that we do need to see higher interest rates, which will slow down the economy next year and really nip this inflationary psychology in the bud so it doesn't become embedded in the system in the way we saw in the 1970s, which of course meant that eventually we had to have that incredibly damaging deep recession in the late 1980s to finally get Australia out of this inflationary psychology.
So, Bill, is the big problem, are Australians simply talking about inflation too much at the moment?
Yes, I think that's the problem. I think once people start to condition themselves to inflation, people expect prices to rise, and businesses feel that given the incredible pressure they've been under in terms of their costs through transport, through raw materials and that, they feel they finally do have the capacity to start raising prices. And once consumers see those consistent price increases and accept them, then businesses have the opportunity to go further. And that's the cycle that we need to break. And that's why I think that rates need to go above the current levels and about 1% above what I would call the neutral level, and stay there for the course of next year. But by then, I think to wring the inflation out of the system, the scope will be there to cut rates in 2024.
Well, Bill Evans, Chief Economist at Westpac, thank you for coming on the show today.
Thanks very much.